Hello, my name's Jeff McKee. This presentation is about McKee Capital Group and apartment syndication investing. With that, I will get to the material. So we've got a disclaimer. The information contained here is for general guidance, and it's for interest only. We have the McKee Capital Group is not providing independent advice or a CPA legal advice. So please consult your professionals on any investing that you'll be doing. In terms of the table of contents, what we have is the overview and mission of the McKee Capital Group. What is a syndication? Current investments that we have in apartment syndications around the U.S., the benefits of passive investing, as well as investment geographic focus and criteria. Do I need to be an accredited investor? What are the targeted returns and minimum investment ranges? And what are the next steps? In terms of the McKee Capital Group, real estate overview, we're in 3,400 multifamily apartment units from Texas to Florida. 2,500 of those are as co-sponsors or general partners. So that's 200 million plus under assets under management. And then another 800 apartment doors as limited partners that we've invested in. I have a degree from Baylor University in finance and an MBA from there. And then I've been working in high-tech consulting, manufacturing for 30 years. Now, the mission for McKee Capital Group is to educate 1,000 plus individuals on the value of passive investing through multifamily real estate and ultimately achieving financial freedom. So that's what we're out to do. In terms of the current investments that we have on the left-hand side, you'll see the assets under management on the GP side. So we've got a number of these from Arkansas, Texas, Louisiana, Alabama, now Atlanta in Georgia, as well as Florida, North Carolina. Then in the middle section are the limited partner investments that we're involved in as LPs, passive investors. So we started with that, and there's two in Dallas, three in San Antonio. So that's the current makeup of what we have for McKee Capital Group. Now, what is multifamily apartment syndication? So general partners are also referred to as sponsors. Basically, we pool funds from other general partners and limited partners that want to invest in a single purpose LLC apartment community. We're not doing a fund. We're not doing a fund of funds. These are all individual LLCs, individual apartment communities that you get to look at all of the information to decide if you want to invest in that particular one. So it's not a blind fund. Now, once the multifamily complex has been purchased, then we, the general partner team, sponsorship team, are responsible for operating the asset until final sale. So that includes cash flow distributions to the limited partner investors, as well as the ultimate sale of when we do that. Now, what are the benefits of passively investing in multifamily apartment syndication? So we'll start at the top and go clockwise. So obviously, cash flow and capital gains is one of the major benefits. Then it's a hedge against inflation. Obviously, in 2022, inflation's gone up quite a bit. So if it goes up 6, 7, 8, 10%, we're able to increase rents to keep up with what's going on. And hopefully, the salaries are also increasing in parallel in high inflation environments. We're able to use really good financing and leverage, usually 70% loan to value, maybe 75. And these are either bridge debt that is low cost fixed rate, or it's agency debt. So Freddie Mac or Fannie Mae, and the government subsidizes those last two because they want private citizens like us to invest and provide housing for others. And then, we have appreciation is one of the other benefits. Depreciation losses and tax advantages. So there are a number of advantageous regulations regarding taxes. One is a 1031 exchange, which is a deferral of taxes, which you may be familiar with because you can do it on single family, you could do it on commercial buildings and apartments. But then also there has been since 2017 some bonus depreciation from the Tax and Jobs Cut Act. And currently in 2022, it's still 100% year one bonus depreciation of the 5 and 15-year items that are in that asset. And we do a cost segregation engineering study to detail that out. And then this benefit of bonus depreciation starts phasing out in 2023, going to 80% on down for the next several years. And then we do help the communities, and we drive for improving the citizens' lives. So we're making the inside of these apartments really nice. We're refurbishing them, but on the outside, we're taking care of the parking lot, the sidewalks, making sure there's no trip hazards. We're changing out the light from regular lighting to LED lighting, and basically lighting up the community, making it more safe. In some cases, we're adding pergola, barbecue pits, dog runs, gymnasiums, or enhancing the gym that's there. Sometimes we'll put in a swimming pool if there is a demand for the swimming pool in that community. And then economies of scale. So having hundreds of units on one property with the same components, the same appliances, etc., is much easier to manage. The repair and maintenance, the ongoing maintenance is much easier than, say, single family homes that are different components. So that's one of the big advantages of going with multifamily. Then the investment geographic focus and criteria. So we primarily invest from Texas to Florida, including the Carolinas. Now, why is that? Well, these are landlord-friendly states. They have high net in population migration from west to the south and southeast, or from the north to the south and southeast. High income growth generally across these states. And then we also look at large cities, medium-sized cities, and small cities. So that's the tier one, tier two, tier three cities that we look at in these states. And we're looking for good deals. Now, what about the assets? So we are buying existing apartment communities, not ground up development. We're focused on class B and C, what are commonly called workforce housing, people making between, let's say, 40,000 to 80,000 a year. And they're in the service industry, blue collar, some white collar, and they need a roof over their heads. And the size, we're looking for usually a minimum of 100 units up to even 800 units. We had a very large purchase that we closed last summer in Corpus Christi, 783 units. And so the reason the 100 unit is, we require third party property managers, and the larger the unit, the better, in some cases, the property manager you can hire to manage that. Then on our team as the general partners, we also have an asset manager that manages the property manager, and that's the way we're organized. In terms of accreditation, do I need to be accredited to invest in one of these? Well, we're using a Regulation D, Section 506B as in boy, syndication that the SEC regulates. This allows us to use up to 35 non-accredited investors per deal and an unlimited number of accredited. Okay, so on the right-hand side, okay, what is accredited? It's someone that's making as an individual 200,000 a year, or a couple 300,000, and they've made that the last 2 years and expect that to continue. Or it's a net worth of $1 million or more outside your personal residence, the value of that. Now, there's some new things too around it for financial professionals holding in good standing a Series 7, 65, or 82. So that one's new. So then what is a non-accredited investor? Well, someone that isn't making that much money or have that much net worth. But again, we do allow up to 35. So that's a common question that we have. Now, hey, what's the other minimum investment? So the targeted returns that we have here, you'll see the disclaimer on the right-hand side. These are obviously not guarantees. These are ranges. And so we target, when we do the underwriting, when we purchase the right way, 14 to 18% annual internal rate of return. And that's over a 5 to 6 year hold period. So these are not the quick 12-month holds. These are not the 10-year or hold forever. We typically target 5 to 6 years. And in that time, we're looking to double the investor's money. So if someone puts in 100,000, we're targeting within 5 to 6 years to return the 100,000 of principal and return 100,000 of profit through cash flow and through the sale of the asset. We do plan and still have an 8% preferred return. Again, this is not a guaranteed return. This is a preferred return. Now, sometimes we don't start that distribution until 6 months after the project we take it over. and those are on stabilized deals, let's say more than 90% occupied. Then on the deeper value add ones, sometimes we don't do the distribution for 12 months after we purchase, and then we start the distributions. Now, in either case, these are cumulative preferred returns that we're targeting, and that means if we don't pay out, for example, the 8% in the first year, we roll that 8% to year two, and our target by the end of year two is 16% return on the original investment. And we typically pay out quarterly once we get started, and then it annualizes the 8%. And then overall, we're targeting a 10% cash on cash return for these opportunities. Then on the bottom left, you'll see the minimum investment. For the smaller deals, it's typically $50,000. When we say smaller, those are deals roughly in the 30 million purchase or less, and the larger deals roughly more than 30 million, it's 75,000 minimum. That's currently, what we have. It could change, but that's where we're at with the minimums. Now, what are the next steps? So you can go to the McKeeCapitalGroup.com. You can become an investor. There's an icon there on the top right. You can answer a few qualifying questions, and then it'll have an auto reply of my email that you can schedule time. There'll be a Calendly link. While you're there, you can also download some free content. I've got a #1 Amazon best-selling book that I wrote a chapter in, and it's about going from single family to multifamily investing. So then that full book, so my chapter and everybody else's, the other 38 authors, you can download that from my website. Then I also wrote an ebook about multifamily investing. Again, it's a beginner's guide for those of you that may not be too familiar with it. So that's another one you can download for free. And then, of course, you can reach me at jeff@mckeecapitalgroup.com, or my mobile phone is area code 425-785-5751. And I am based here in Austin, Texas. Well, thank you very much, and hope to be talking with you soon.